Welcome back to the channel. Happy Monday. So I want to start the week off strong by talking about a trade idea. I did put this on last week, but it's really only beginning to work today. And I feel like it's super early in it. And as you could see, it's about Meta. Now, last week they reported earnings. Let's just take a look at the chart here and see exactly what happened for earnings, right? So earnings comes out on the eve of July 29. The stock ends up having a gap down. And this is just the cash session itself. So 10% down drop off the back of those earnings. Now, right off the bat, we do not even have to look at those earnings to understand that there must have been something super negative about it. Because otherwise, earnings would not have gapped down, right? If Wall Street deemed everything to be on the uppity up, it would not have gapped the stock down. If we look at the 15-minute chart, let's look at the 30-minute chart here. Right, so this is the aftermarket session here. Look what's happening, right? First, what is this now? First 90 minutes post earnings, the stock completely dumps. The earnings call happens right here at 16:30. What does that put us at? 4:30 Eastern time. It does not help the stock up. Stock has a little bit of a bounce, not that much though, and it continues to trade lower in the overnight session. Opens up the next day, and then we begin, as you can see here, to climb back up. And on the third day, we've officially had an earnings failure. And this is when I got into the stock, into Meta. And I'm going to show you exactly the position that I initiated for in it. But on the third day, we've successfully closed above the prior close right before the report, right? So this is the action, first day post-report, post-earnings report. This is the candle, the last day pre-earnings report. So the moment we crossed over that close right there, which if we hover over this candle, I can read off the top toolbar there, it says close of 585.61. That got me into the long position. And you might notice that the stock actually had not closed whatsoever below it since then. It traded underneath it a little bit, right? It shook us up a little bit back and forth. But for the most part, it's kind of stuck to this level. And the trade that I put on, I could have bought shares, but I didn't. Because looking at the chart for Meta, clearly we've been in some super long consolidation period for Meta, right? Dating all the way back to mid-2024. We really have not gone far. From the fall of 2024 till now, I mean, that's 2 years of the price sitting in between a range of 500 to 750 for the most part, right? That is a big range, but we haven't really gone anywhere. Can Meta absolutely rocket out of this range on the back of super poor earnings? Probably not, okay? That's super rare to see, especially when we're coming from the bottom of the range, but can it shoot back into range and show us that, hey, there's still not enough sellers to break us to the downside? That can definitely happen. And as you saw that CNBC article, which I'm going to bring up again, couple things, right? They missed on EPS for previous quarter, and their guidance was also on the light side. There was a lot of negative things to take away from it, which explained why the stock had dumped over 10% post earnings. But we've managed to build that back up and more, right? Which is promising. It's promising with the idea that we can bounce back into the high end of this range. And that is the play that I'm making here. This is the butterfly trade that I put on for Meta. This is the exact size, right? Now, keep in mind, I usually analyze the trade in Thinkorswim because they have super good tools for putting together option positionings to see how they are. But then on Interactive Brokers, that is where I go and actually set up that trade, okay? So this is the exact trade you're looking at on Thinkorswim, which right now, it is only up $600, okay? That's it. So again, super early in the position. You can see also the average price is about, what is it right now? If that's my average price, what is the price of the, okay, here we go. It's at $18.45 and I paid about $16 for the whole position there. Obviously per option leg and so forth. Option share, I mean. And so if we go back here, what's the play that I'm looking for? Well, I'm looking to see Meta go back within the top end of that range by September. This dotted line right now represents where price is right now, just right here. The purple sloping line here represents the P&L of today. So yes, if Meta were to shoot up to 720 today, I would be up $8,000 in that position. Now, granted, that is if everything else is kept the same, in particular volatility. If I'm over here, I'm long Vega, right? So expansion volatility does help me. If price moves here, notice how actually expansion volatility hurts me. So there's a reason I'm showing you this, because even though Meta can skyrocket to 730, my P&L will be way less than $8,000, because if you're a long butterfly, you actually want to see volatility contract, not go up, except if you're outside of the wings. So in this case, it wouldn't be an $8,000 P&L. It would actually be less if somehow, for some reason, Meta went up 20% today. But again, all it takes is a couple days for volatility to contract a little bit, or price not to go crazy, and it will contract to a good degree. But anyhow, we're obviously playing a range here, right? In particular, we want to get over 630. Why? Well, that's kind of our break-even point on the downside, right? We're not too worried about the upside yet. It's all the way at 800. Let's kind of chart this up so we understand exactly the range we're playing with. 800 is over here. So a move above there by mid-September, we have a loss. Now, mind you, as you see the sloping line here, if it were to happen today, we would actually still be in profit, right? So again, as we move the dates forward, notice what happens to that sloping purple line, right? It starts peaking through that middle, and then the sides begin to pull inwards, right? But even towards the beginning of September, if we have it blow through that 800, and again, the volatility is kept the same as it is right now, excuse me, we would still be profitable on it, right? We're not going to be negative on that trade simply because it blew through that top leg. And notice that we also would be profitable kind of if we're below that 630 come about, what is it now? Almost a month from now, right? In general, you can see that if we start managing this trade about 3.5 weeks from now, if we're chilling down here at 590 still, the trade obviously has to become, we should consider taking that trade off at this point or another. Because obviously if data starts kicking in hardcore those last 2 or 3 weeks. So if we're really out of those, if we're really sitting on those wings over there, outside of those wings, that's when we have to manage a trade and get out of that trade. Preferably we're chilling somewhere in the middle here come those last 2 or 3 weeks. Because once we're here, that is when we are long theta, as you can see right here. See, so in this example, again, 364 theta, easiest way to kind of look at it, it's never going to be exact or perfect, is that, hey, in the next 24 hours, let's say, or next trading day, I'm sorry, the position will gain $364 in P&L from theta being burnt. And if we're outside of here, you see what it is, okay? And then also notice that the closer we are to expiration, that theta burn is higher and higher, right? Which is also why our P&L graph, that purple one, keeps on pushing higher and higher. But yes, we are in this butterfly trade, okay? So if we kind of look at the numbers that we're working with here, right? Our maximum loss, if we do absolutely nothing, we write this as a loss. Never manage it whatsoever. If we look right here, it's $47.88, so just under $5,000. We should never be taking that max loss. The position has to be managed beforehand. Even taking half of that max loss, I consider that to be a poorly managed trade, by the way, okay? We're looking, in my opinion, I am looking to maybe have a loss if this trade, if the trade idea does not work out, a loss of about $1,500. In my experience, with the way this trade is put together, it should not exceed a $1,500 loss. On the flip side, for profit, what I normally will start to do as we kind of move within that body, within these wings, is as we get closer, I might peel off a little bit of size. I might peel off a little bit of contracts. It just kind of depends where we're sitting in it. Fortunately, like I said, with Meta, I feel like we are going to be sitting range bound. So if we can kind of blow through that 630, get closer to 650, 700, that's where I'll be feeling a lot more confident. And we only have, I mean, technically speaking, as I kind of look at the sizing here, right, I only have 3 full contracts on, right? So there's not that much peeling I can do, right? I take one off and I'm left with 66% of my position. So I have to keep that in mind, obviously, sizing wise. Some of you might only be able to put on one of them, right? So in that case, if you can't peel anything off. But in the perfect world, I'll say this much, the trade idea does work out. We move within those wings. We're able to kind of hold within here the next couple of weeks. If we just pull off, let's say, to the last week of August, getting a P&L of about, I would say, around 8,000 on this trade, I consider that to be a success. That's kind of what I'm shooting for, where it's like our allocated loss I want for this trade is about $1,500 if the idea is wrong. And if the idea is correct, we can kind of aim for that $8,000 P&L. That's how I'm looking at it from a risk reward perspective. And as we talked today, obviously Meta is having a good day and it continues to push up right now. If we look at the Mag 7 stocks, I mean, they are relatively green on the day, right? About 40 basis points. Everything is kind of turning up higher, but Meta is definitely probably leading the pack right now, being up to, almost 2.5% here. So this is looking good so far. But this is my trade idea. This is how I am personally playing Meta and the way I'm putting it to kind of give me that best risk and reward ratio. Because sure, you can go long the shares, but I kind of feel that, hey, setting it up this way, getting us back into range and sitting into range is going to pay off way better. If you have any questions for me, let me know in the comments below. Thank you so much. Like this video if you haven't, and subscribe for more content.